Hello, welcome, and sorry. Happy Friday, everybody. It's great to be with you today. It is August 1st, the first day of a new month, and we got lots happening, lots to talk about. This one's titled, What If We Are Right About Bitcoin? Yesterday, we shared a video on the channel titled, What If We're Wrong About Bitcoin? And it went fairly viral for Maple Bitcoin anyways. We had a lot of people like that one, a lot of good feedback on it. So we figured we'd take the opposite view today and talk about the flip side. What if we're right? What happens then? And I am Jor. I'm joined by my good friends Rajat and Forrest here. And without further ado, boys, let's get the heck into it. Where do we begin? Did you guys watch the strategy show yesterday? What
I
a
watched it.
2-hour session that was. What did you guys think?
Rajat,
I didn't
did you
watch it, but I saw some things. Like I saw some details from people. Go ahead, Forrest. I think your knowledge would be better on this.
Well, I'm still kind of digesting it a little bit. I definitely want to rewatch it. It was pretty dense. I especially liked it's kind of funny to have like podcasters on asking questions, but they did that for like 45 minutes. They had a couple industry guys asking questions, and then it was like Lynn Alden, Samson Mao, Preston Pish, Jeff Walton. Like it's like kind of podcasters, but very, very knowledgeable on Bitcoin treasury companies and stuff. So I thought the question and answers was probably like the best part of that entire thing. But I also just thought the discussion around Stretch, I think Stretch is such an underrated product. And I think that the market will wake up and realize that like all these products fit really, really great niches. They're preferred instruments. And I think Stretch is a really obvious one once people recognize it. And it's a huge addressable market. And I think, Saylor even said in that call, Stretch is their iPhone moment. And he wrote a book called The Mobile Wave. And he basically predicted the dematerialization of all of these things that people used and the digitalization of them, right? So, there's a whole industry of selling roadmaps, and all of that value got sucked into the value of a phone, because now you just have that on your phone. And so that happened with everything, right? It's not going to happen with everything with a phone, right? There's sort of a form factor issue and things, but a lot of things became dematerialized. And I think that Bitcoin has parallels with that. And I think strategy kind of has parallels with that too, where they're sort of creating these products and just sucking out. There's these inefficient sort of paper products like a T-bill, right? Like a treasury bond bill, which is largely what money market or part of what money markets are formed on. And they're just transferring that into their own system, and they can do it way more efficiently, and they can pay people way more because they're capitalized on Bitcoin instead of treasury bonds, which are just terrible, right? So I don't know. There's a lot there, but incredible presentation in my opinion.
The Stretch product is interesting one to me, because we're talking about on the stream this morning, because one of Rajat's pieces of advice is that people should be in Bitcoin and cash. And so we spent some time talking about that throughout the live streams here, probably in some different clips. And I think it's important to know when we're clarifying, cash in the bank is much different than cash in your hand. And so physical cash, I love the idea of. I kind of suggested using something like Tether, which is USDT that you can store in an Aqua wallet. And I also mentioned the new Stretch product from Strategy. I'm fascinated by that. But I think the main problem that I have with it today is that you can't take self-custody of it. That's why I like USDT is you can put it in a wallet that you hold the keys to. Whereas with Stretch, you have to buy it through a broker, I believe anyways, unless I'm missing something there. But so you need their permission to basically access it. So that's kind of the only drawback I see for it today. But I do believe we're moving into a world where everything we have, including like Bitcoin, Dogecoin, Strategy shares, USDT, Stretch, will all be available, to take custody of. I think that the tokenization of digital assets or of assets overall is coming down the road. So that's kind of the only thing that I'm unsure about right now with Stretch is the inability to take custody of that one.
It's definitely a big trade-off, right? Like, there's sort of reasons, as you said, to have physical cash for your position of your cash, to have it in different forms, physical cash or a stable coin or a bank, right? There's different trade-offs for each one of those. And having it in a brokerage in a ticker that is backed, I mean, 5 times over collateralized by Bitcoin, that's an additional there's additional risks there. Not that they're meaningful, but they're just different. So you should evaluate how much you want to hold in those. And you just mentioned tokenization there. I've been extremely bearish on tokenization. My thought process around it. I'm still incredibly bearish on the idea that tokenization leads to the value accretion to a cryptocurrency. So like, I don't think that ETH is really going to explode up in value because of tokenization. I don't think Solana is going to do that either. I think the way it's going to work is it's a type of business where it's like it's a race to the bottom. So the people that care about tokenization, they don't care about decentralization. Therefore, all they are looking for is fastest and cheapest. So they're constantly going to go down the rung of cryptos until they get the fastest, cheapest, and they don't care how centralized it is, which means very little value is going to accrue to any of them, even the one that ends up winning out of the tokenization battle, because they're doing it for so cheap, because the margins are so competitive, because someone else might do it cheaper. So, however, I think that the stretch product is an unbelievable product to be tokenized, because it's going to trade between $99 and $101, effectively making it a stable coin. A tokenization could even, do a tenth of that. You could own a tenth of one of these stretch shares, or no, sorry, 100th of it. And then you could have $1. You could literally have a stable coin tokenized thing that is backed by this preferred, and the tokenized company, the company that tokenizes it, could take a percent off the top, and then they're paying you, 6 to 8% for holding a tokenized asset. I'd be very surprised if companies weren't developing that, because they've already tokenized MSTR. Like MSTR is actually tokenized. You can buy a tokenized version of it on crypto rails. So this product makes a lot more sense to me, because the only tokenization product that I've seen, and really the only killer app of crypto so far, and I'm talking about crypto, not Bitcoin, is stable coins. So
I thought you were going to say Caspa.
Absolutely not.
Yeah. Anyway,
I agree with you guys. I think that I was gonna say like whatever. Okay, so I agree with you guys.
There's going to be a clip now, Rajat.
Oh man, I agree with you guys. I think that the stretch seems like a really great idea, but if we're right about Bitcoin, it won't even matter.
Well, it's an intermediate thing.
Yeah,
it's intermediate, right? It's there in the short term, and then over the long term, like when we think about, let's say, 50 years down the line, I don't think US dollars are going to be around. Like at that point, the block reward from Bitcoin is probably going to be under like 1 million Satoshis, right? It's 50 years from now. So that would be 2075, probably under 1 million Satoshis per block. And at that point, think about how valuable one Bitcoin would be. So that's 2075. So 2076, oh wow, I said 1 million Satoshis. It's actually 40,000 Satoshis. So at that point, in 50 years, people are going to want as much Bitcoin as they can get, and there's going to be none created. And if they choose to exchange their US dollars for Bitcoin, then they're giving away something that's worthless for something that's worth everything. Why would anybody want that?
100%
Why would anybody want US dollars, right? And 100%. I think that's where we go to, what if we're right about Bitcoin? So what if we are right? What if the way that I see it, I think that Bitcoin is going to replace everything. It's going to replace housing as a store of value. It's going to replace stocks as a store of value. If there's that like 0.01% chance that we're wrong, let's say governments start being more efficient, they start being more responsible, they stop spending recklessly. But it's a free opportunity for them to get money. So why would they? They have no reason to. Their incentive is to keep printing because it's an arbitrage opportunity for them, right? It's a way for them to get value out of us by doing nothing. So they're going to keep doing it, and in that way, I think you're going to see that I think that Bitcoin is going to eventually replace people's. I guess people have that mindset, that belief that the U.S. dollar will be around forever. Even the financial system is built on the U.S. dollar continuing to survive. That's the assumption that we make. The U.S. dollar will survive forever. So if Bitcoin replaces the U.S. dollar, that's where we think that's where I think it's going. I think that's where you guys think it's going. At that point, stretch won't matter, right? MicroStrategy is just the fact that they have that Bitcoin. They're going to have to use that Bitcoin to do something, right? So let's say they might hire developers. They might hire, for all we know, actually, maybe Stretch could be like a platform it could be like a layer 2 platform, right? Instead of using,
it kind of is already, no?
Right now it's a layer 2 as the US dollar, but if the US dollar were to disappear, then we could use Stretch to move around Bitcoin and the tokenization thing that you guys were saying. So you can use that the Stretch shares, you can tokenize them, and then you can send them around, and each one represents a certain amount of Bitcoin instead of a certain amount of dollars. Even MicroStrategy shares that could be done with.
Yeah, it's possible. I mean, they could also just put their Bitcoin into Lightning channels and get yield from that, right? Like if dollars are going away, which is what I actually believe, eventually that's going to happen, and we use Bitcoin as currency. A lot of that is going to be on layer 2s. So, and there'll be value accretion opportunities for that, which there already is with Lightning. I think just one more side note here on Stretch that I think is interesting is I do believe that this is like an interim thing, and I believe like all the stable coins, all the dollar sort of attempts at continuing the dominance of dollars is all like short term in the grand scheme of things. But with the Genius Act that just came in, stable coins are now going to have to be backed one to one by treasury bills. This is not technically a stable coin. It could just be a tokenized asset of an ETF that Strategy is backing, not even directly backing by Bitcoin. However, every single dollar that flows into it is buying Bitcoin. So even though this is an interim thing, this is something that is going to just unlock a huge amount of buying pressure onto Bitcoin. Like this could be a huge engine of acquiring more Bitcoin for Strategy, even though it's just an interim thing. And I think that's what they're betting for. Like these interest rates are pretty high that they're paying, right? But they're paying them denominated in fiat, and these are perpetual preferred, so the debt never comes due. There's never a big lump sum they have to pay back. They're just like leaking out a little bit of fiat, but that fiat goes down in value over time. It's kind of like genius.
One of the things that they're doing there, so what you just said there, I think something just clicked for me. So what they're doing is they can literally absorb everything in the market. So they can, like, let's say, for example, if Apple wants to borrow money and right now they're paying 3% or 2% or whatever, 5%, they can no longer borrow at 5% when the market figures out that the money can just go into STRC.
Mm-hmm.
So they're just absorbing all that. They're taking that capital away from all these other companies. And I mean, what if that leads to them not being able to pay their dividends?
Yeah.
They can't, I mean, they don't need to do that, of course. But let's say more money isn't going into research and development and they lag behind. What could happen to Apple? I mean, this could actually, this could disrupt everything. It could disrupt the entire market, right?
I mean,
go ahead.
Well, I was just going to say Apple's maybe a little bit more safe, but there's a ton of companies that like literally their debt is, or sorry, their dividend obligation is higher than the income that they receive. So they pay dividends through debt, and they acquire debt cheaply because they're a corporation. And those are zombie companies, right? And what happens if their debt costs more and nobody wants it? Right? Because it's a debt market. So if nobody wants their debt, the only way they can get debt buyers is to raise the interest that they're willing to pay on that debt instrument. But they have to raise it higher than something like Stretch or the other yield curve products that they're developing. And that's just going to be untenable for them.
Yeah.
It's going to break these companies. Like it's going to destroy these corporations that have corporate debt.
Can we highlight that comment from Kayla? So something that I've noticed is that at the bottom, this makes me think that we're at the bottom. This comment.
Yeah.
So notice that every time somebody posts comments like this, it's because I don't think they quite understand Bitcoin. They're
where we are right
falling
now.
for the fear, right? If you look at what's the fear and greed index at right now?
Oh, it's probably so low. Like I released a video today and got so many questions, so many people being like, "Bro, what are you talking about? Have you looked at the market?" And I'm like, "IBIT's down 1.8%. So Bitcoin's down in like in a regular trading day, 1.8%. MSTR is like puking after an earnings, like 4% down, 5% down. It's like, what are you talking about? Why are you looking at one day? It's crazy to me that people still do that.
See, like this shows me that this is what happened when Bitcoin passed 100K last time. They were like, "Oh, it's going to 60K. Don't buy right now. Wait to buy." Nothing against you, Kayla. I'm not trying to diss you or anything like that, but people will always do this. People always do this no matter what. This is the fear. Like you can see the fear. This shows you, like if you look at your feed on X or on Instagram, if you look at whatever feed you have, whatever one you look at, if you look at Bitcoin posts, people are fearful right now. They think Bitcoin is going to zero. They think Bitcoin is going to go so much lower. This is proof. So that was just an aside. This person said here, I'm going to be honest, but realistically, Bitcoin can go back to 80K, so don't rush or FOMO at this price. Bitcoin's at 115K now. This person or the people who follow this advice, they're going to be FOMOing in at 130K. And they're going to be thinking it's going to 200K, and then it's going to drop. And then they're going to sell when Bitcoin drops back to 120K. Then they're going to sell at 120K. Then they're going to buy back when Bitcoin goes to like 145K. And then again, they're going to sell when Bitcoin drops back down to like 110K. And they're just going to keep doing this. They're going to lose money. They're going to bleed everything out because they're doing it based on emotions. And this post is purely based on emotions.
Yeah. I mean, the best strategy in my eyes is buying Bitcoin whenever you can, whatever that means to you, right? Depending on how much cash you want to have in an emergency fund, if that's the case, or if you're all in. But, buy Bitcoin whenever you can is a strategy that works. Waiting to 80K is a strategy that has a very, very slim chance of success. As Rajat said, more than likely, you're going to be waiting. It's not going to quite hit where you think it will or want it to, and then it's going to go bounce back up, and you're going to, oh, that's a dead cat bounce. That it's going to come back down again, and it won't. It's up and to the right. I mean, there's incredible volatility in Bitcoin, but it's up and to the right. So betting on where it's going to the downside is really, really a lot riskier than people realize.
I agree.
Yeah, and it's I saw another comment here saying from Tyler, if it was better money, it wouldn't fall at bad news. I mean, and again, we're not trying to pick on people here or shit on people. It's like, it's just clear that you don't really understand what's happening here if you think that volatility at this stage of the game is a bad thing. The only reason that there's volatility, I mean, there's a lot going on macro-wise, but like the main reason why Bitcoin goes down and why people worry about it is because they don't really understand what Bitcoin is. And it's like, it'll eventually get to a point where the volatility is going to be gone. That might be in 50 or 100 years from now or whatever that may be. But that's not the point. The reason why it goes down is because there's sellers. And the reason why there's sellers is because there's people who don't understand what this asset is. And that's like, when you compare Bitcoin and gold, I think that everybody watching the show would agree with the fact that if Bitcoin and gold share all the same properties, except you can exchange Bitcoin on the internet, which is a pretty big part of our lives now, then Bitcoin's probably a superior asset to gold. And so why is Bitcoin's market cap not $20 trillion today? It's because people don't understand this asset. That's the whole disconnect here. And that comes with time. That comes with every show that we do every week. We try to explain these kind of things to people. And eventually those people who are selling and causing the price to dip in a day because they're selling it because they don't understand it, eventually that will change. And so it's just a matter of time.
Yeah, the market is made up of so many different participants. It's not people that only think that, Bitcoin is a hedge, right, against the fiat system. There's a ton of investors that buy Bitcoin as it leads the QQQs and they think it's a tech play. And then when jobs reports get revised, as they did in the macro scene, they think, oh, well, this is 24/7, incredibly liquid. Somebody can market sell 80,000 Bitcoin in a week, so I can get out my position as well, and without, any slippage. And they do that because they just expect the market to continue going down on bad macro news, and Bitcoin is just part of the market to them. There's so many participants that have no idea what this is. And there was actually a comment there that I really liked, that I'm going to read out. Chad Lupkeys. Yeah, they're thinking it's a volatile tech stock instead of a new foundation for the monetary base. It's money. We're all looking at this in the lens of denominating it in dollars, but one Bitcoin is one Bitcoin. And it's kind of a dumb saying. It doesn't really mean that much, but I kind of think actually, and maybe it does mean something when you go deeper into it, right? It's like the value of Bitcoin has not gone down. It's the value of Bitcoin denominated in dollars. And dollars are this thing that when you really start to go down and look into it, you start to think, why is anybody using these? These things are completely worthless. The only reason they have worth is because somebody else is willing to accept them because they were born into the system of using these. It's very inefficient, and we're all getting stolen from using these things. So we need to move to a new monetary system, which is Bitcoin.
There's another comment there that says it's a controlled casino. I don't think Bitcoin is a casino, because the casino in a casino system, in a casino game, the house always wins no matter what.
They might be talking about like the market overall, though.
But even then, I don't think Bitcoin, that would relate to Bitcoin, no?
Well, the only thing that Bitcoin we have impacted by that is people comparing it to that same system still. So people still kind of lump Bitcoin in with everything, like the last comment we had there, comparing it to a tech stock or a startup or a technology. It's just the lack of understanding there that it is not part of that casino, right?
Mm-hmm.
I mean, I could be wrong. W might be talking about Bitcoin here.
I think what they're saying here is that Bitcoin's price is like it's controlled by the whales, I guess, and then they're almost giving it to you like it's almost like a casino for them, where they let you play and then they wipe you out if they want to. But I don't think that's how it works, because over the long term, anybody who holds Bitcoin and just keeps holding, they make a lot of money. Like, they do really well. It's not even that they make money, they do really well, and they feel better. Like, I've completely changed as a person after I studied Bitcoin, and to me it's not been like a casino at all. It's been just a way for me to plant seeds and build wealth for the future. That's it.
Yeah. It's a market. So I'll just say one thing here. I mean, Bitcoin's a market, right? So there are these whales that can push around price in the short term. I've made lots of videos about this, and they do that to drive out leverage, because they liquidate people's positions and then they can accumulate. But it doesn't mean that these whales are on the right side of the trade every single time, because Bitcoin is incredibly unpredictable. In the short term, they can do lots of accumulation of Bitcoin by manipulating the market price in the short term to some degree. But if they're caught offside and they're short Bitcoin because they're trying to drive the price lower to liquidate people, and all of a sudden there's a massive catalyst, they're short Bitcoin. They have to, maybe they have some sort of hedge, or they can, get out of their position or something, or algorithmically they see that or something. But like, man, the price is potentially manipulated to some degree by market participants in the short term in price action, but in the long term, it's a store of value savings mechanism that goes up and to the right.
Bingo. This comment here from Nav. So Nav's actually sent in 3 super chats today already. So thank you, Nav. We got $2, $2, and $5. So we're trying to get to these as quickly as we can here. But just before we get into this, I think it's important to note that we did decide today before the show that we're actually going to extend the show a little bit. Last week we did a 1-hour show, and it just seemed too quick, too rushed. And so we're going to extend it by about 15 or 20 minutes today. So we're going to have some time at the end of this for some questions. So if you do have any questions, put them in caps if you can. We're going to try to star them and address a lot of them later. But if you do want to guarantee your question get addressed, you can send a super chat, or you can send a zap to that QR code right beside Rajat's head there, and you can actually leave a note with that. So you can send it to the QR code with a question, or you can send it to maplebitcoin@coinos.io, And it looks like Ian has already sent in 2,500 sats without a note there. So just a support zap from Ian, clean your machine. Wow. So thank you for that. This question here, this super chat, I think is very interesting because, you know, there's a couple like catchphrases in Bitcoin. One of them is everything divided by 21 million. Another one is 1 Bitcoin equals 1 Bitcoin. And you hear it a lot. I feel like they're kind of buzzwordy, and they kind of get, you know, oversaid. But I think when you get to the point of like really not just saying it and kind of understanding it, but like feeling it and really deeply understanding what that means, where everything on this planet, every laptop, every phone, every car, every house, every acre of land is all going to be divided by 21 million. Then you see what the real value of Bitcoin is at that point. And I feel like it's the same kind of thing with 1 Bitcoin equals 1 Bitcoin and $1 equals $1, which is true here, Nav. $1 does equal $1, but the difference here is that the purchasing power of that dollar is going down, and it will go down forever because they're going to keep creating more of it. Versus Bitcoin, even though it's 1 Bitcoin equals 1 Bitcoin, that means that the Bitcoin itself, the number won't change, but the amount of things that you can buy with that 1 Bitcoin will fluctuate. So it doesn't matter what the fiat price is doing. I mean, it's kind of correlated because people still measure things in US dollars, but eventually we're going to get to a point where everything's priced in sats. 1 Bitcoin is going to be equal to 1 Bitcoin. And the only thing that matters is how much you're going to be able to buy with that 1 Bitcoin. And if you look at that in housing prices, you know, 5 years ago, it was 50 Bitcoin to buy a house, maybe, or 500 Bitcoin, whatever it was. And it just keeps going down and down. So even though the number isn't changing, the things that you can buy with that number does change.
Purchasing power. It's very difficult to measure something in purchasing power, but that's kind of what you begin to understand when you dive deeper into what 1 Bitcoin equals 1 Bitcoin is that the purchasing power increases, but the denomination stays the same, and everything else you measure against it goes down eventually. But it's very difficult to measure purchasing power. And maybe before everything is denominated in Bitcoin, maybe Bitcoin will be denominated in gold. You know, people already measure it against the gold chart, right? And we're not at all-time highs or whatever, right? Because gold is, you know, scarce and has good properties as well. It's like, you know, what money used to be, right? Measuring against fiat really doesn't make sense, right? So yeah, maybe measuring in gold is better currently.
I think another problem with the $1 equals $1, of course, nominally that $1 equals $1, but over time the denominator, you have $1 versus how many dollars there are in existence, that denominator keeps increasing. So you still have $1, but that $1 will, like you guys said, decrease in purchasing power, but it can be replaced. It can be printed out of nothing. You can't do that with Bitcoin. If you have a Bitcoin and you lose that Bitcoin, somebody can't just print more Bitcoin and give it to you. So if you have 1 Bitcoin, let's say you have 1 Bitcoin, you give it to a lender, they give you fiat for it. If they go bankrupt and you don't get, you can't get your Bitcoin from them because they don't have it, they can give you dollars, but you may not be able to buy that same amount of Bitcoin with it again, right? So that 1 Bitcoin equals 1 Bitcoin, because nothing can replace Bitcoin. Things can replace the US dollar. Bitcoin is the only thing that can be truly used as money the way that it does, that it is. It's the only thing that can be used as a medium of exchange, a unit of account, and a store of value. There are a lot of competitors for that medium of exchange role, but nothing has that balance of characteristics that allow it to work as all three. So the US dollar is great as a medium of exchange. $1 equals $1, but you can't use it as a store of value. So technically, $1 today is not the equivalent of $1, let's say 20 years from now. In 20 years, that dollar could have lost 90% of its value. But if you have 1 Bitcoin, you can probably be pretty, I think you could be pretty confident in thinking that Bitcoin is going to either hold its purchasing power or it's going to increase. So if you can prepare a lot better that way, right? So if you, let's say, for example, your life is going to cost you 1 Bitcoin today, then in 10 years, 20 years, you know that 1 Bitcoin will continue to support your lifestyle because over time that purchasing power keeps increasing. I think this is more of a planning kind of way of thinking, right? With the US dollar, you can't plan. $1. You go ahead.
I was just going to say that's a great point, because if you think about, like, we talk about the broken measuring stick all the time being the US dollar, and we don't know how many dollars exist today. We don't know how many dollars are going to exist in a month from now, and especially in 5 years from now. But the one thing that you can be certain about with Bitcoin is the supply schedule, which is what Rajat's talking about here. It gives you the ability to plan. It's predictable. The US dollar is not predictable. It changes every time there's a new administration in there. How much they print, how much they cut back, how much debt they add to the ceiling of it. So that's a great point, I think, Rajat. And just the predictability of Bitcoin because of the supply schedule, because it's written by code and is not influenced by humans. So when you're trying to save for the future, you want to know how many units are going to exist in 10 years from now and 100 years from now, even 10 days from now. We don't know how many US dollars there's going to be. We know with certainty how many sats are going to exist at that time. Yeah. Your mom 101 is really brightening up the chat here. So let's address this one. The dollar isn't going away. Yes, it is. The Federal Reserve dollar, as we know it today, the FERN, is going away. And the reason why it's going away, it's not our opinion, it's because it's literally backed by nothing. And at some point, businesses are going to start to realize that, and they're going to demand payment in something that actually has value. And that is Bitcoin is the best option for that. So yes, the dollar as we know it today, the Federal Reserve note, is going to go away. It's not a matter of if, it's a matter of when.
Either it goes away or they're going to keep charging you more and more. Like today, a burger might cost you $15. At some point at Walmart, or at McDonald's, it'll cost you $30. Then it'll cost you $50. At some point, it'll cost you $100 to buy one burger. So it's up to you. If you have enough fiat and you want to keep paying with dollars, then you can keep doing that. But at some point, your savings, if you keep saving in dollars, the dollar only exists because we believe it has value. If you keep saving in dollars, you are giving value to the dollar. If you're saying things like the dollar will always exist, then you're going to, you probably have a bunch of savings in the dollar. I don't save in the dollar. I'm going to ban this guy. Jay Rumi is kind of annoying. I don't.
Yeah, I mean, it's different if you want to the chat. Yeah, if you want to make valid points about something, but don't come in here and just like waste people's space here. Like the live chat's for productive, funny, entertaining comments. You just don't need to be annoying.
Yeah. So back to what we were saying there. If you're saving in the dollar, you're giving it value. You're ensuring that other people can give you dollars and they can value it. So they're able to take advantage of you, right? So if the dollar can be created out of nothing, why would any merchants want it? So back to what Jor was saying, why would merchants want the dollar if it can be created out of nothing? They create things, they add value, they put their time, energy, and effort into something, and then they create whatever they're creating. Why would they accept pieces of paper that can be printed for that value? Today, maybe that's the norm, but I think Bitcoin is it's forcing people to understand that that shouldn't be the norm. Without Bitcoin, there was no way to do that. You could use gold, but how are you going to transact with gold across the world, right? You can't interact with somebody who's selling you a digital product with a gold standard. Gold was hard money. The reason why gold didn't work, of course, is because it's not portable enough. Fiat currencies are portable, but what Bitcoin does is it combines all of the features of fiat and gold. We literally don't need fiat anymore. We can keep using it, and people will keep using it until they understand what Bitcoin is, but the majority of people haven't. At some point, people will figure it out. And that's when you know that Bitcoin has replaced fiat.
Yeah. Yeah. I mean, dollars are like fiat is backed by nothing, as you've just said, really well. And they're increasing the supply rapidly. So they're creating more of this thing that's backed by nothing. And they're inflating it. And anybody that uses it is not benefiting from using it. They're actually getting taken advantage of because they're holding it. And the supply of it is inflating. Essentially, when something is inflating and it's backed by nothing, it is a giant bubble. It's a giant Ponzi scheme. And you can only inflate a bubble so long, like a balloon, right? You think of a balloon, you're blowing it up. You can only blow it up so big before it pops. And not only that, but Bitcoin is completely building out that other monetary network. And this guy has said multiple times, oh, 90% of transactions is with fiat or whatever it is, right? That really doesn't matter. Yeah, exactly. It's a transition, and there's this other monetary network that isn't being used as much, but it is much more capable at being used because of its ability to store your value. So when that bubble pops, when the system of fiat doesn't work anymore for more and more people, like it stopped working for me when I began to understand it, and I moved myself over to the other monetary network. These two things can exist simultaneously, and they are. And one of them is growing, and one of them, the fiat system is growing too, but it's growing back by nothing, and it will explode on itself. It's just a matter of time. I don't know when that's going to happen, but it will happen. It's completely unsustainable.
It's crazy. Like, so in the basement here, that's where I have like a little mini gym set up, and I've been writing on the wall. I've been trying to every month write the price of Bitcoin on there. And when I first started doing it, it was about a year and a half ago, maybe 2 years. The price was like $25,000 or $30,000. And it's just crazy how far this has come. And I think that if you're somebody who stores your time and energy in Bitcoin instead of dollars, life has got significantly cheaper for you. It's crazy. Like Rajat and I had a good chat about this the other day, just on the sidelines. But you know, if you've been storing your time and energy in Bitcoin for the last 4 years, you've noticed life gets significantly cheaper. Like significantly cheaper, pretty much 4x. Like as people's lives get more and more expensive, their rent, their utilities, their food costs, everything is going up in dollar terms, everything. But if you're storing that energy in Bitcoin, everything's actually getting cheaper. So it doesn't matter who's using the dollar. It doesn't matter what the percentages are. I'm pretty sure that might be Jerome Powell in the chat. So we'll just let them stay. We're not going to block them or anything, but like, it's just clear they're so far out to lunch that it's not even really worth talking about anymore. But I mean, these are the kind of conversations that we have to have. I know that they're not really open to hearing anything. They're just trying to spam the chat here. But like, that's why we are talking about Bitcoin. That's why the three of us have dedicated our lives to Bitcoin, is because it is far superior to any other asset that has ever existed before. And, you know, a live chat isn't going to sway our opinion on that.
Can we talk about that comment that they left? What happens when BlackRock ends up with 25% of all the Bitcoin?
Yeah, I mean,
how would that even happen?
I was going to say, like, these are kind of like stupid questions or like silly, but at the same time, these are like valid concerns, I think, from the average person who hasn't spent a lot of time in Bitcoin. So what was the question, Rajat?
So it says, what happens when BlackRock ends up with 25% of all the Bitcoin? That's not gonna happen. Even MicroStrategy, which is actively like withdrawing money from the other parts of the economy, isn't going to be able to get to 25% of the Bitcoin. Even they know
get to like 5, I don't think.
Yeah, even them, they were saying they might get to 5. I don't know.
They're at 3.
Maybe I'm wrong, but they're
at 3 right now.
But 25%. Like,
you know what's interesting is so Saylor was on CNBC today. There was a clip, and one of the anchors or whatever asked him, if you could get to 100% of owning 100% of the Bitcoin, would you? And it's like, so these are questions people are seriously asking. Like, it's crazy to me. It's like, obviously, no, you don't want to own 100% of something. And he's like, I own 3% of it through the vehicle of strategy. So 97% of this asset is held by other people. And it's like incredibly diversified already. So it's exponentially harder to acquire more of it as time goes on, because the price of it goes up and up. And
he said that on this thing there. He said it's getting exponentially harder to obtain Bitcoin at 3%.
Exactly. And the other thing here with this question is BlackRock doesn't own the Bitcoin. They're holding it on behalf of other people. I mean, they technically own the keys, and I guess you could make the argument that they do own the Bitcoin, but they're holding it on behalf of other people. BlackRock isn't putting it on their balance sheet and holding it as the company. It's an ETF where people are buying it through BlackRock. So it's actually millions, thousands, hundreds of thousands. I don't know how many people own the ETF of BlackRock, but lots. And they're using that as a vehicle to expose themselves to Bitcoin. So, I mean, it would be a centralization risk, I suppose, of coins. But again, that the way Bitcoin is built, that actually doesn't end up being a problem of consensus or of changing or of power. It's really just like what people end up doing with the coins they own. If they just hoard them, then that just means it's off of out of circulation, which just drives up the value of all the other people that end up using it to purchase things. So I don't know. It's a pretty good system that Satoshi and the other coders built.
Yeah, not bad.
Can you just share my screen there, Jor?
Yep.
So I found this graphic here. This is actually 40% of the Bitcoin supply. And you have to understand that majority of these are not going to sell.
Can you zoom in a bit, or is it possible to?
Yeah. Oh, it's not letting me.
And a lot of, and again, a lot of those are exchanges which are holding it on behalf of other people as well.
Yeah.
Like that isn't their balance sheet. That isn't the balance sheet of Binance and Bitfinex. That is people leaving their coins on the exchange.
Satoshi's coins are probably never going to come back into the market. The yet to be mined. So I've been hearing. So actually, let's talk about the yet to be mined. So 1.1 million. Those Bitcoin are probably never going to be sold because the miners, the industrial miners, they're actually taking on loans to buy more Bitcoin. So why would they sell what they mine? They can pay their bills with borrowed money. They can borrow against the Bitcoin that they have. So if for BlackRock to own 25%, right now they own 3.5% in total. For them to go to 25%, it would be impossible. The biggest holder holds 5%. And you have to understand that if BlackRock wants to own 25%, what if Strategy also wants to own 25%?
Yeah.
What if Binance also wants to own 25%?
What about the US government?
It's like saying that, oh, there's 21 houses on a block and one person wants to own 6 of them, but they're not for sale.
Yeah, exactly. That's it. It's a finite resource and people want to own it. It's very difficult to get
then
that.
How are you going to buy them? Like, are you going to force people out of them? Like, how is BlackRock going to go to people who own Bitcoin, who own, like, how would BlackRock take this 5% from Satoshi? They
Develop
can't.
quantum, I guess.
Knock on their door.
Maybe, yeah. But even like these other ETFs are competing with them, right? It's not just them. Like you said there, Forrest. I think the majority of these are exchange. So exchange, ETF, exchange, DeFi. ETF, government. Why would the government give their Bitcoin to? I mean, I don't even know if they have this Bitcoin, but why would they give it to BlackRock?
Well, also that Bitcoin is not theirs either. A lot of that needs to go back to the people that were affected from the criminal seizures. But yeah. But exactly all of those, except Strategy and Tether, so far are all owned by all the people that have claims to the Bitcoin.
Yeah.
69. Nice. 69% of the supply is owned by individuals.
Wow.
Yeah.
So, I mean, like we can sit here and complain about it, how many Strategy has and BlackRock has. The most important thing is we can just get off our ass and talk about it and spread this as much as we can. So the average person gets, that number, that 69% is probably going to go down. Mm-hmm. We've done predictions about this. I've kind of given my projection about 25 years out, what things could look like. And it's probably a maximum shift of like 5 to 10%. Because again, you have to keep in mind here, how this works is that as more and more people show up to the party here and want Bitcoin, the demand goes up, so does the price. And therefore, those people who are holding Bitcoin today, the Bitcoin that they have is more valuable. So whatever they were planning to or need to spend that Bitcoin on, they're going to require less to be actually spent. Yeah. And so as demand goes up, so does the price. And therefore, the Satoshis that people like us actually have to part with goes down. That's this whole cycle here. And so
the flywheel.
It's like
the amount that you have to spend decreases. So if somebody has, let's say 1,000, so today 1,000 Bitcoin seems like a lot, but let's say today they have 1 Bitcoin. At some point, that 1 Bitcoin is going to be worth, let's say $20 million. If your lifestyle is costing you let's say $300,000 a year at that point, at some point, your lifestyle for 1 year is going to cost you like 0.0015 Bitcoin. Or 0.015 Bitcoin, something like that. So
something
very
like
small,
that,
a very, very small percentage of your stack. So over time, that amount is going to decrease and decrease because people think that, the Bitcoin can't grow that much, but it can, because you're just looking at the price of Bitcoin, right? You're not looking at the price of the US dollar. The US dollar's price can be decreased forever. Demand for the US dollar can literally be fulfilled forever. The US dollar can lose 99%, then it can lose another 99%, then it can lose another 99%. The US dollar can easily lose 50% per year in terms of Bitcoin. But people aren't looking at this. People are looking at it the other way. They think, oh, the number is too big. So it can't get to that point. It can't get to $1 million. But you have to understand there's a limited supply of this. And for the people who want it to be able to buy it, they have to bid more and more US dollars. And over time, more and more Bitcoin is being locked away. Not all of it, let's say, for example, out of that 80,000 that was sold not too long ago, maybe not all of it is locked away forever. But I would say, let's say 1% of it, 2% of it, locked away forever. It's never going to come back into the market. And over time, you have more and more people adopting Bitcoin, more and more people understanding it, more and more people spending time to learn about it. But you also have people who studied it 10 years ago who are continuing to create more value than they consume. So they keep buying more and more. All of it, it compounds over time. So we have 1% of the world who figured it out already, and it's already at 120K. 99% of the world, what's 99% of the world going to do for a finite asset? The rest of the world is literally fighting to get some of that Bitcoin in their own hands, and they'll be offering whatever they can to get it. Even the billionaires, they'll pay you whatever you want to get Bitcoin from you. But this is a good thing, because if the billionaires have all the Bitcoin, even if BlackRock gets 25% of the Bitcoin, it doesn't really negatively impact you, right? If they have 25% of the houses, that's completely different.
Yes.
So they take the focus off housing and they put it into Bitcoin. BlackRock is doing exactly that. Imagine that MicroStrategy, they're doing exactly that. Imagine MicroStrategy, instead of buying, how much Bitcoin do they have now? Like $70 billion worth. Imagine they bought houses instead of Bitcoin. How much would that bump up the price of housing? So you have to think of it from this perspective that Bitcoin has no cap. There's no cap to how high Bitcoin's price can go. Bitcoin's price can keep going higher, but the housing market does have a cap, right? So the housing market, if the price of houses go too high, then people suffer. They can't afford a place to live. With Bitcoin, you don't really suffer if the price keeps going up. You can just keep buying fractions.
Bitcoin is capable of holding all of the wealth, infinite amount of wealth within it. It can always handle more purchasing power going into it. Yeah. It doesn't negatively affect it by more value going into it. What's interesting there is something that Trump said, actually, which is pretty eye-opening to me, that a politician said this, but he said that Bitcoin takes pressure off of the dollar. And what he meant by that, in my estimate, is that when the dollar weakens, people take those dollars and invest them in things because they don't want their purchasing power to go down. And what they typically invested in is assets. And so we have asset inflation when there's debasement. It's what happened during COVID. There was massive asset inflation, and it goes into real estate, and it affects cost of living. It goes into purchasing vehicles. People are willing to pay more for groceries. So the grocery prices go up, everything goes up. But if value of dollars, if purchasing power goes into Bitcoin, it's almost separate from all those other things in the fact that it raises in value, but it doesn't make you don't live in your Bitcoin, right? So it doesn't create a cost of living crisis. And he was touting that as a good thing. So I think people should, I think a lot of times people should fade what politicians say about things. But in this case, I think that that is pretty interesting, the fact that he said that. And I think that there's what it's showing to me is that there's a place for Bitcoin. And even politicians know it. And politicians are some of the dumbest people in the world, in my opinion.
Not if you ask Trump. He won't agree with you there.
Your Mom 101 actually mentioned, he's like, I'm not trashing you guys or crypto. These are legit concerns. I mean, it's actually a good thing that they ask these questions, because maybe we wouldn't go into these topics, because to us, because we've been in Bitcoin for a while, we've studied it for a while, we have gone through this question. We don't ask ourselves this question anymore. So it's a good thing that you're asking. It's a good thing that you're asking, what if BlackRock owns 25%? It's not very likely, but people will still think about it.
Yeah, like I said, I mean, those pundits on CNBC were asking the exact same question, and so it's not like I don't think they're genuinely that curious. I think they're fed those questions, and trying to make a news segment and a clip and go viral on YouTube or something, right? Like that's why they're asking those things. They're asking a fearful question. I don't think they really. I think they probably understand Bitcoin more than they lead on, to be honest. A lot of those CNBC guys. But anyway.
Yeah, I mean, we should. So we're 49 minutes into the show today. We got a couple super chats to address. We got a little ticker at the bottom of the screen here that says, if you would like to support the channel, you can scan the QR code beside Rajat's head there. And we got 500 people in here right now. So whatever you're watching on right now, YouTube, Twitter, if you're watching on Twitter, you can share it. If you're watching on YouTube, any one of our channels here, make sure you press like. It does help for those who aren't able to support financially. And, you know, we got a pretty good thing going here, and we're pretty hell bent on not taking on any sponsors. That's going to be our MO, I think, in the future. And so we are kind of reliant on the support from the community here. So if you do have some sats you don't mind sharing, if you like the message that we're spreading today, you can very easily, without anybody's permission, send some value this way through the QR code, or you can send it to Maple Bitcoin at Coinos. No, sorry, wrong one. Maple Bitcoin at Coinos.io there. So we got a couple. Somebody sent in 420 sats. Nice. No message there or anything, but we do appreciate the sats there. Okay, boys, what should we do? We got about 20 minutes left.
We should hit those other super chats, and we should probably also let people know about the school and the continuation of this live chat.
Right. Yeah, let's do that.
Cool.
Should we go through the super chats for? Actually, let's talk about school first.
Yeah.
Let's be quick.
So we got the Maple Bitcoin school communities. I'm sure most of you know. Many of you have left comments saying that we're grifters, scammers, whatever that may be. But we have 150 people in there from around the world. Our goal is to get one Bitcoiner from every country on the planet in the Maple Bitcoin school community. So we have exclusive content for helping you learn about Bitcoin, learn what this network's about, learn how to protect your Bitcoin, manage your private keys, what a UTXO is, why you should care about it. Ton of stuff. We got master classes done by all three of us that are only available in the school community. And of course, we got the network, the community there. We're doing our Maple Bitcoin happy hour starting in about 36 minutes from now, which is a Zoom session. It's not on YouTube. You're not going to be in the comments. You're actually going to be with us. It's going to be like a live call with Rajat, Forrest, and myself. And I'd say that, you know, we've kind of bounced around a few ideas before about if somebody were to reach out and say they want to get the three of us on a call sometime for some advice, we'd probably be in the $1,000 per hour range. And so with this, you get 4 of these sessions every month, $20 some a month. And that's where we're going to be going right after the show today. We got a little bit of an intermission, but then we're going to hop in there. So I'm going to share the link for everybody who wants to join. You can do it for 7 days, a free trial. You can stop by today, see what it's all about. But that's the school community. You guys got anything to add on that?
Nope.
Nope. I think that's good. I'm just looking forward to it. Really fun.
We got our first weekly grifters comment.
Nice.
Nice.
Jonathan Roof.
Well, look at this. Real Millionaire Virgin says, I'd pay $1,000 for an hour of your time. I mean, it's, I would say that the stuff that we talk about, the information that we provide, the content that we provide is truly invaluable, because it might be 1 or 2 things that you pick up on, whether it's from us or somebody else in the community. It really could be the difference between you having your Bitcoin in 20 years from now and not. And that's one thing I say all the time is like, it really doesn't matter how many sats you have today. It's completely irrelevant. The only thing that matters is how many sats your family has in 50 years. And so that's kind of the point of this, is just to help people navigate. It's a very lonely place. It's a very scary place when you're first getting into Bitcoin. And that's why we have this community here. That's why it exists. And that's why we've been putting so much time towards it.
And keep in mind that, okay, people think that maybe we are, maybe we're charging too much. Education should be free. But wealthy people don't think that way. Wealthy people don't think that way. They don't think that somebody who's charging for, like, if you're paying for a college degree and you're paying thousands of dollars and you're still in debt for that, and you're complaining about paying $20 a month to learn about the best asset in the world. And it took me 4 years to get to this point. My goal is to get people to learn about it in like 2 months, 3 months, if I can, right? If I can teach somebody in 2 months how about Bitcoin just in depth, and they can ask me any questions they have, I think that they would speed up the process massively. I think that's worth it. People think that paying $20 a month is 100% worth it, especially if, let's say, for example, there's a couple of examples that I want to mention. One guy booked a meeting with me and he sold 10 rental properties to buy Bitcoin with them. That's the first one. And then the second one was this guy watched a $50 webinar. Now, a lot of people told me that I was a grifter then too, but I sold a $50 webinar and this guy bought 30 Bitcoin after watching that webinar. So to them, I'm not a grifter. If you can create value on the internet, why wouldn't you?
Yep.
Yeah. It's value for value.
Yeah, exactly. Value for value. Great way to think about it. And I think that a lot of people see this as like an expense. Like an expense would be a Netflix subscription. That's an expense. This is an investment. And our whole point of this is that we want you to actually be making more money, not only protecting the Bitcoin that you have today, but actually generating more money from this with the information we have, with the network that you're going to grow from this. We have a 40% referral on there. So if you got a couple friends that are also getting into Bitcoin, send them that way. You get 3 people to sign up for the school membership and your membership's paid for. So why not do 30? Why not actually start making a side income from this? Like, start talking about Bitcoin, start sharing the community that we have, and you can actually earn a pretty decent monthly income from it. So it's an investment. It's not an expense. And for anybody in the comments calling us whatever, we do not give a shit. So for anybody who is interested in growing their knowledge, their network, and their net worth, you can join their school.com/Maple Bitcoin. Very simple. And we will be firing that happy hour up in exactly 32 minutes from now.
Real Millionaire Virgin asked me, Rajat, you have 2 communities. What's the difference between both? So the one that I have of my own, which is Bitcoin Explained, that's just me. I'm the only one that creates content on there. I'm the only one who adds content on there. Whenever we do live sessions on that one, we do it on Thursdays, and it's just me. It's for an hour. With the other one, the Maple Bitcoin one, that's all 3 of us. That's all of us working together to deliver as much knowledge as possible. We have put, like, I'm telling you, we've put thousands of hours into Bitcoin, and we're working to convert that time into knowledge for you guys. We're confident enough because we've put in the time to actually give you this information. If we weren't confident, we wouldn't be starting communities. We wouldn't be making videos like this. People who, like, if you don't have $27 a month to spend on your education, then you probably should. I guarantee you that if you're complaining about $27 a month and you're going to fast food to eat fast food every day, then you're losing out, right? You're losing out. Like, if you were to spend this $27 a month, that's what, 5 coffees?
Yeah.
Avoid your 5 coffees, put it into your education. And I'm guaranteeing you, I actually ran the numbers here. This is pretty, it works really well for this. Actually, let me share my screen here. I'll share it with you guys. I think this is pretty interesting. I think it's on the it's on the compound interest calculator spreadsheet. But if you were to, if you were to buy Bitcoin, instead of buying your coffees for a year, you delay gratification for a little while, you'll be able to buy coffees literally forever. Right? You can see the numbers here. I did the numbers for you. Like, this is
how long do you have to delay before you can buy coffee forever?
So let's say, for example, if you buy 1 coffee a day, over time, the price of coffee keeps going up. So if you buy 1 coffee a day for $1.50, your daily buys in total will work out to be $547.50 for the year. In 2015, 1 Bitcoin was $272. So you could have bought 2 Bitcoin instead of buying coffees for the year. So if you bought those 2 Bitcoin, you would have Bitcoin for coffee every single day for 275 years. So let's say, for example, if you don't buy those coffees, you dedicate that time to Bitcoin, you dedicate that money to the community, it'll increase your conviction. And maybe you can actually get more Bitcoin than you normally would have. So let's say, for example, if you have 1% of the stack, 1% of your portfolio in Bitcoin today, who knows, maybe joining the community will push that up to 50% or 75%.
That's awesome.
Yep.
That's a great chart, man. And people, that's 275 years of coffee. But I mean, people could start buying lattes, then frappuccinos. They could start balling out with their coffee purchases.
They could like sprinkle gold on their coffees if they want, because even the price of gold decreases in terms of Bitcoin.
Yes.
So we got to.
Yeah,
sorry, I got to jump in here for us. Sorry to cut you off. We got a big zap here, biggest one of the day so far. This is from Cedar Sats in the comments here. I think he's just taken off right now, so I wanted to get this in before he left. Member of the school community, big supporter of the channel, and I wanted to share the screen here because he left a very funny message with it. I don't know if you guys can see that or not.
Yeah,
I'm still working on it.
12-hour oil change. I don't get the reference.
We talked about how you can go to a mechanic.
Oh yeah,
and
right. Right.
I'm still working on it.
To learn to do your first oil change. Maybe, yeah. That's really funny.
Oh man, thank you, Cedar Sats, for the sats there. Very much appreciated.
Yeah.
We got a couple more here too. We should check on. We got 8787, so a little close to 8888, but a couple less. But we'll take that for sure. Somebody sent in 100 with no comment on it. We got 57 sats, no comment on it. And then we got 1,117 sats from our good friend Ballsy Golf. So thank you everybody over on who's been sending to the QR code there on the screen, maplebitcoin@coinos.io. Appreciate it.
Amazing. Let's finish off on those super chats there.
Sure.
Yeah.
And one last thing I wanted to say about the school community is you can actually join for 7 days for free. So you don't have to have any commitment there. Totally free. So you can join the session today right after this, and you can explore the community. You can see what we have to offer in terms of the exclusive content on there. And then you can make a decision if you want to cancel it or if you want to stick around. But we wanted to put that option on there for people just in case, it's good. Free trials are good. It gives you a chance to explore before you commit to anything.
Yeah.
So let's, what do we have here? We got a couple from Nav here. So I think this is just more of a comment than anything else. Exchanges will pay you fees to buy your Bitcoin.
It does seem like the fees are too high. Like you make like purchases for, for like equities and securities. Like you can buy on Robinhood for 0%. Wealth Simple 0%. Interactive Brokers charges me $1 a trade. The lowest fees that I've found in Canada is Bitcoin Well, and it's 1.2%. And that's just like a flat fee across the total dollar amount. So it does seem like fees are too high, but I think that as Bitcoin becomes more and more adopted, exchanges will probably become less and less relevant and more competitive, and the fees will have to come down. I don't know if we're going to get paid to sell Bitcoin. That seems interesting to me. I don't know how that would work, but it does seem like fees do need to come down overall.
Here's the thought that I had, boys, and this is a little bit maybe off topic slightly, but I think relevant. So we know that there's like Ledden who does lending. We did a video masterclass on the school community about this. We know that Strike's been offering Bitcoin lending where you can put your Bitcoin up as collateral and essentially get fiat in return for that. And so they're charging about, I don't know, 8 to 12% right now, depending on where you're looking for it. Do you guys think at some point, so that's like in order to be a lender, you have to have enough fiat in order to give out to people for lending, right? Like whoever's working with Strike in this whole thing, whoever's working with Ledden as the money provider, the money bag there, they have to have that sitting in fiat in order to give it to people, right? So my thoughts on this is like, as Bitcoin goes through these next 10 years and we're seeing consistently like 30, 40, 50, 60, 100% compound annual growth rate, they're earning like 6% on somebody's interest off of that fiat. Why not just buy Bitcoin with that instead? Do you guys think that from a lender's perspective, instead of holding fiat to lend out at an interest rate, will they just buy Bitcoin eventually because it's like a way better business idea, like way better return?
Yeah, absolutely.
So what happens then though?
Well, lending and borrowing, the arbitrage of fiat and Bitcoin lending and borrowing falls apart.
At some point, nobody's going to want fiat for their Bitcoin.
Yeah.
Right. So at that point, I think what's going to happen, what you have to think about is what's going to happen on the way to that. so everything is probably going to be repriced, right? So at some point, let's say, for example, the world goes to a Bitcoin standard. This is the way that I've thought of it. I guess this is game theory, right? Like we're playing out what's going to happen in our own minds. So the way that I've thought of it is that over time, instead of, let's say, buying houses, you're going to keep buying Bitcoin. The value of Bitcoin is going to keep increasing and increasing. You're going to benefit if you make that decision. Oh, good job, by the way, in that comment. The value of that Bitcoin is going to keep increasing and increasing until everybody who doesn't have any Bitcoin has already accumulated, and Bitcoin is the global money. It's the biggest savings vehicle in the world. That's what the world reserve currency is. The world reserve currency is just whatever the thing is that most people are saving in, right? So eventually Bitcoin will get to that point, and once that happens, I think we're going to see a massive run up where all fiat collapses. So let's say you're going to be moving US dollars in wheelbarrows to pay for things, right? Your loaf of bread is going to cost you thousands of dollars, right? And we're going to go through that phase, and at that point, people are going to be transitioning away from fiat. So along the way, we're going to see the S&P 500 be repriced. We're going to see houses be repriced. Like right now, a house is worth 4 or 5 Bitcoin. Today, the entire Bitcoin market, all of Bitcoin is worth like 4 million houses, 5 million houses. And there are 2.4 billion houses on Earth. 2.4 billion houses, but you can only buy 4 million houses with all of the Bitcoin. So the Bitcoin is that money, right? So what we're going to see, the way that I see it, this is my view of what the game theory is going to do. We're going to see that the price of housing is going to decrease in terms of Bitcoin. It's going to be repriced way, way lower. So let's say 50,000 Satoshis a house. Cars are going to be repriced in Bitcoin. The housing prices could actually drop below their production value, because if there's way too many houses, then somehow people have to get to those houses, right? Somehow people have to have a reason to own those houses. If the people who own them don't have a use for them, they're going to get rid of them at a loss. They're going to be okay with it. This is way down the road. This is probably,
and I think we should clarify that, because there's a comment here saying that, like, we're not talking about this is going to happen in a year from now, but the point of this is
10,
like
20, 30 years.
Yeah, at some point, lenders are going to be like, well, I'm making 6% off lending out fiat for Bitcoin. Why don't I just take that fiat and buy Bitcoin and earn like 50, 60% per year? Like that could happen sooner than that. Like there's a lot of scenarios that play out over the next couple of decades, but some of these realizations actually might happen quicker than we think. I think.
Yeah, well, lenders end up holding the bag in a collapse. Like in 2008, the banks were all over lending, over risking their lending, and they had a backstop of the money printer. But if the fiat collapses and people switch over to Bitcoin, then you can print as much fiat as you want to try to bail out the lenders. It doesn't matter. It doesn't equate to more Bitcoin, because when Bitcoin becomes the unit of account at that point. Yeah, I mean, lending works, I guess. They earn something. Maybe they can. A lot of these people also are able to leverage it up, or they're able to create the dollars themselves if they're a financial institute like a bank. So then there's no actual cost to them acquiring the dollars that they give out, and they're just receiving 6% interest or whatever, right? But all of that falls apart like that. They're all left holding the bag. Like, you do not want to be a lender at a certain point in history.
I don't even know if they're left holding the bag, because they created it out of thin air anyways.
Yeah, but they're left without the Bitcoin. So if you
you're right.
If you have the Bitcoin and they are like, if you borrow and you get some money and you buy some Bitcoin, and then all of a sudden the value of, or not all of a sudden, but over time the value of that fiat goes down, priced in that Bitcoin, you can pay that loan off to them for super easily, right? Like they could be made whole nominally in that fiat, but have way less purchasing power for having given that loan out.
So Jake mentioned there, we won't see dollars turning into the Zimbabwe currency. It'll just be switched one day to be backed by Bitcoin. What you're saying here is that the fundamental value of the dollar is going to change. So technically, the dollar that we have today will be like the Zimbabwe currency. If the dollar is backed by Bitcoin, that's a separate currency.
Yep,
that's not the dollar. That's not the dollar that we have today.
Exactly.
Right? The dollar that we have today is literally worthless. It has no value, it has no backing. At some point, if the dollar is backed by Bitcoin, that's going to be an entirely brand new financial system.
And in my opinion, it'll be worth less than Bitcoin, even with the Bitcoin that they have
Yeah.
on in reserves, right?
Is that because of the risk?
Yes, that's because
Right.
you're giving them value and you're trusting that they have the Bitcoin. Um,
Oh, that they won't print more dollars either.
yeah, that they won't, yeah, create fractional
You're right.
reserve. There's all sorts of risk. I mean, the benefit might be that the payment rails are easier, but by then, I mean, already payment rails directly with Bitcoin, peer to peer is possible. Um, Low fees on chain currently, but also the Lightning Network becomes more and more capable every day. So I don't see the use case of a dollar that is backed by Bitcoin. But again, that might be this little weird interim thing before
Yeah.
everybody's fully on Bitcoin. There might be that opportunity for some government.
Yeah.
Grady Gravy. Great name. Grady Gravy. They got a $5 super chat here. They also sent in a $2 one that I highlighted there before, which said, I just buy on Kraken, send it to my Electrum. Pretty simple process.
Easy.
But Grady says, I got my friend to buy Bitcoin, but he can't stop gambling it. I told him to put it on a laptop and put it in storage, his unit. Should I take his seed phrase? So you shouldn't take his seed phrase, but there is like this cool thing in Bitcoin that you can do called the Uncle Jim model, which is where you can actually buy a cold card for yourself. You can generate like the master seed off of that. And then you can actually set up wallets inside of that cold card. And you could give them the seed phrase, you could give them the 12 words. But the nice thing is those 12 words are also going to be stored within the index of your cold card. So if he messes that up, if he loses it or something misplaces it, he can still come back to you. You don't have to tell him that, but you can keep actually a copy of his seed phrase while giving him his. And if he loses it, you can be the Uncle Jim there, the nice uncle that actually held on to his seed phrase. But yeah, I mean, I don't know what kind of relationship you have with your friend, but I don't think that that's a good idea to to take a seed phrase. I don't know. What do you guys think?
Well, I mean, even if he has the ability to hold the seed phrase, if he's gambling it's still not going to be
Right,
there if he loses
right,
it. It doesn't
right.
really matter about the seed phrase at that point. I mean, it sounds like your friend has a gambling problem. I mean, maybe I don't know. I don't know how bad that is, right? Maybe he's just selling it, shitcoining, trading, whatever. Thinks he can trade, whatever. But yeah, I mean, you can't control what other people do, right? I mean, the best you can do is send them this video, send them some other content, maybe have some more conversations. Say, send them the thing of sailors saying trading is a sign of lesser intellect. Maybe that'll snap them into holding. Yeah, I don't know. It's you can't control what other people do, though.
Have you guys thought about how more and more people are gambling now? Because and I've been thinking about it more. I've been trying to do more research on what the psychology behind this is.
It's
More,
desperation, right?
It's fiat.
I don't think that's what it is. I don't think it's desperation. I think it is fiat. So the conclusion that I came to is that right now there's like backstops for everything, right? Everything,
Yeah.
like you're pretty much good. You don't have any real problems, right? So you're getting a salary at work. You're gonna get paid no matter what. You have food. You can go to the grocery store. Worst case, you buy loaves of bread for the cheapest price possible. So I think the reason why people do that is because, I mean, historically we were hunter gatherers, right? We had risks. There were, I think, men like to take risks,
Yes. Great
right?
point.
Because they like to take they like to do things that will give them a bigger output. But that's what's led to the world that we have today, right? If without risks, how would we have all the things that we have? So today, I think men are, actually maybe women as well. I'm not even saying this as I'm not saying this to I guess to criticize a specific gender. Even women are
Mhm.
in this situation. Some women do like taking risks as well. But the reason why I think they take risks is because their life is risk free. You have risk free interest rates. So you can deposit your money in your bank account. They'll give you interest for free, even though it's not real money. To the majority of people, it is real money. So to them, it's like, this isn't what I want. I don't want the regular, whatever it is, like the 0.1%. I want more. I want to invest in something. I want to, and then it turns into gambling. Like people are always surrounded by sports. They start watching sports and they start gambling. I was watching a baseball game a couple of days ago. I don't really like watching sports too much, but I was watching this game, and at the bottom, the entire game, there were ads for FanDuel. and they're like, oh, this is what the odds are for this. This is what the odds are for this. If somebody has a gambling addiction and they have let's say a stake account, stake accepted Bitcoin transactions, right? They let you gamble with your Bitcoin. So if somebody has a gambling addiction, they have a stake account, they deposit their Bitcoin on there, it's gone. You can literally save for your entire life, and it's gone in a day or two. There was this really great video that I watched. It was about how people want one more because they expect that they'll get a good return, and it basically just becomes a gambler's fallacy. And my solution for this, like my answer to this to Grady would be, tell them how to lock their Bitcoin. Put it into a wallet, put it into a cold card, and lock it for, let's say, a year, 2 years, 4 years. I actually think watching your Bitcoin go up and down is a dopamine hit on its own, because you see that, oh, if I just hold on to it, it hurts if I lose it, but then you see it go up, and it's very fulfilling to see it go up. And just knowing that your money is there and it's locked up and you can't do anything with it, it kind of makes you want to not do the thing that's losing value, right? So if you have your Bitcoin locked up, maybe you will stop depositing money into a gambling site. And like I said, I've been thinking about this a lot. I have friends who gamble, and it's gotten really bad for some of them. I feel really bad about it. There's nothing I can do, but I think Bitcoin kind of satisfies that need for the risk and the reward, right? You have a long enough time horizon, you're always going to win with Bitcoin. It's almost like people say, oh, it's an option that lasts forever. It's like a call option on everything in the world that lasts forever. And that's exactly what it is. You're basically betting on it once, and you can get the return from it literally forever. It can keep creating value forever. It's literally a money printer. That's basically what people are trying to do when they gamble on altcoins. That's basically what people are trying to do when they buy, or they put money into a gambling site, and then they try to bet on things and they try to get a better return. But with Bitcoin, it's almost like it's a lottery ticket that's already won, and you get to just hold on to it. Eventually you'll see the return from it. And that's what we were referring to, I think, when Jor was mentioning how your cost of living decreases. When you see that cost of living decrease, it's very fulfilling. And for me as a man, I want to be able to support my lifestyle. I want to be able to support my family's lifestyle. And to me, that's extremely fulfilling. That job that you have where it's increasing 1% to 2% per year, your salary is increasing, and you can barely even get the things that you want. I mean, that's not the kind of life that I want to live. I don't want to be tied to working a job forever. I don't want to be waiting until 65 to get a pension. And Bitcoin fixes that. People want to do that with other gambling vehicles. Let's say they do sports betting, they go to the casino. Bitcoin gives you that option. It takes you through that volatility, so it gives you that dopamine hit, but at the same time it gives you that excitement, and it gives you the reward if you hold on to it. So tell your friend to lock their Bitcoin away. That's my solution.
I want to speak on this a little bit too. I think we've developed a lot more as a society than we have in our like actual DNA. So, there was a time when we would have a serious dopamine hit. You mentioned dopamine, you mentioned risk and reward. That is what people get from gambling. But there was a time when, we'd climb a tree, find a piece of fruit, and have a serious hit of dopamine because we risked something, we rewarded something. We're hunting an animal with a group, real primal stuff. This was part of our nature. We now live in a society that is very not very rewarding. There's a lot of people without purpose. There's a lot of people that have lost hope. There isn't a lot of dopamine, except all of these systems that we've built to like artificially like tap into that part of our nature. Social media does that, drugs do that, gambling do that. It's all to give you a sense of feeling rewarded when you actually haven't necessarily put in the work or really risked anything to get that dopamine hit. So it's a function of our society in a way that we've built, and fiat is a big part of why we have the society we have. And we kind of need to like rewire a little bit, and Bitcoin helps with that rewiring. As you said, like you can see over time the value of this Bitcoin going up, and that's really rewarding. It's this sort of like slow feeling of like dopamine, but it's not like a direct hit. It's not that it's not either you get it or you don't. It's just like, it takes a little bit of patience. And it's that short-term versus long-term horizon. And I think largely it's a function of the lives that most of us live today.
Yeah, and over time, like when you see your Bitcoin going up, it's a dopamine hit because it helps you to confirm what you learned, right? Like I spent 4 years learning this thing, and I've been spending like as much time as I can on this thing every single day. And when I see it go up and people tell me, "Oh, you got lucky," it just makes me think, okay, you didn't spend 4 years learning about this thing. That's why you didn't buy it. You buy Bitcoin at the price you deserve. Once you actually put in the time to learn about it, that's when maybe you'll start getting lucky too.
Yeah.
Right. But people don't think of it that way. People just think of it as, oh yeah, you just got lucky. You didn't actually put in the time. You just bought it as a gamble. But I mean, I think they're just coping because they missed out and they feel stupid. Right. I think that's what it is for most people. They can't just drop their ego. They can't just let go of what they believe. And they'll keep telling you, even when Bitcoin goes to $1 million, that you got lucky. You got lucky. You got lucky. Even though we, like, Bitcoiners have been saying this for a way longer time than even I understood Bitcoin. Before I understood Bitcoin, people were saying that Bitcoin is going to be adopted by the government. Like, there's one of the first public posts from Hal Finney was that there will be Bitcoin banks. And now people are saying, oh, Bitcoiners are bending the knee to banks. No, that's not true. It was just going to happen regardless. It was going to happen no matter what. There was no avoiding it. It was inevitable. It happened now, and now people think that, oh, this isn't what was supposed to happen. No, that's not the case. People have predicted this for years, for over a decade, and it's just playing out the way that they said it will.
Yeah, and a lot of the banks will adapt and adopt Bitcoin, and those ones will be successful and continue to operate as businesses. And the ones that don't, the ones that push back from it, I saw a comment about RBC denying somebody withdrawing because they were going to go buy Bitcoin. RBC's done for if they continue to do that. Like I imagine they'll just end up having to switch up their stance on that, but they really see Bitcoin, self-custody Bitcoin, as a threat to their business, which is custodying your fiat dollars and being able to lend it out at crazy fractions. But yeah, they're done for if they don't adopt it, which they will probably.
Yeah. Can we, Jordan, do you have anything to say about that? I just want to answer Buck52's.
Yeah, no, we got to go here, boys.
Oh yeah,
we
okay.
do.
Which question there?
Rajat? Well, it was the one. I'm afraid we're in a Bitcoin echo chamber.
Oh,
if you're right, you're obviously going to have other people joining you, right? It's going to feel like an echo chamber. But the thing is that we're right. We're right. Our title here is "What if we're right about Bitcoin?" We are right, and that's why more and more people will talk about Bitcoin with you. They'll tell you about Bitcoin because it's the right thing to do.
Just go hang out with any other group of people, and you will realize how much of an how small we still are, and how those people are completely unaware of what Bitcoin is or anything. So yeah, you can step out of the echo chamber if you want, but it's pretty boring, I would say.
Yeah.
Okay, boys. So we got a Moonstone super chat here. Please clarify, is borrowing against Bitcoin still okay? Sorry, I missed the conversation. Is it no longer profitable for lenders? Goal is never sell, always borrow. Yeah, I mean, it still makes sense. The question that we had is like, are lenders always going to want to hold that much fiat in order to lend out to people? Because it's kind of an opportunity cost for them earning interest, like a small percent of interest versus just holding the Bitcoin instead. So that's what the conversation was. I think it makes a lot of sense to lend against your Bitcoin as long as you can versus selling it. And that's kind of our thesis, and it hasn't changed on that. We're just kind of talking about it from the lender's perspective, not the Bitcoiners.
I would also just say one quick thing there, George, before we go. I know we got to go, but we live in a very specific time in history where fiat is collapsing and Bitcoin is being adopted. So you can actually arbitrage that by people still making what I believe is the wrong trade, right? The lender in this case that's giving you fiat for in a loan, and then you're going and buying Bitcoin, they're making the wrong choice. It's better for them to go buy Bitcoin, but they don't know that. They don't care about that. That's not their business. So you can arbitrage that. And, you want to do that responsibly, and you want to figure out what your debt ratio should be as an individual and all these kind of things. But quite likely you could do really well by borrowing fiat, because fiat's going down and Bitcoin's going up. In the long term, duration risk, interest rate risk, liquidity risk, all these different risks you should always think about with borrowing. But it's still potentially a good trade to do.
Bingo. Okay, so we're heading over to the Maple Bitcoin Happy Hour. It's going to start in about 5 minutes from now. Forrest, Rajat, myself are going to be over there. You can turn on the audio, you can turn on the video, you can just sit back and relax, have a drink, whatever you want to do. But the chat is being flooded with the link there. So we have no excuse not to see it. You get 7 days for free. We encourage you to come try it out today. And if you like it, you can stick around. If you don't like it, you can cancel your membership. It's really that simple. So big shout out to everybody. A huge amount of support today. Lots of chatter, really good stuff. And especially for the big zaps today from Cedar Sats and a couple other Satoshi Anons who are supporting the channel. So if you're watching this later and you would like to support the channel, that QR code right beside Rajat's head, somebody just joined the school, I heard, and gives a little ka-ching there. Or if you're watching this on your phone, you can send it to that address right there. So everybody have a great weekend. It's a long weekend here in Canada. Thank you, Rajat. Thank you, Forrest. And we'll be right back here next week for another one. So hope to see you in the happy hour. If not, we'll see you right back here next week. Thanks, fellas.
Leave a thumbs up. Leave a thumbs up before you go.
Good call.
And subscribe to Maple Bitcoin. See you guys.
Yes.
Thank you so much.